Dive into crypto margin trading, a whole new ball game. Hey there, fellow investors. Are you ready to take your trading game to the next level? Today, we're diving headfirst into the exciting, and let's be honest, sometimes scary world of crypto margin trading. This isn't your typical buy and hold strategy. It's a fast-paced, high-stakes arena where fortunes can be made or lost in the blink of an eye. Think of it as the crypto market on steroids. Just like an athlete on performance enhancers, margin trading can supercharge your gains. It's not for the faint of heart, but it can lead to some seriously impressive gains if you play your cards right. Imagine doubling or even tripling your investment in a matter of hours. We're talking about amplifying your buying power to the max. By borrowing funds to increase your position size, you can potentially reap much larger rewards. But remember, folks, with great power comes great responsibility. The same leverage that can boost your profits can also magnify your losses. Margin trading comes with its own set of risks, and believe me, they're not for the inexperienced investor. A sudden market downturn can trigger a margin call, forcing you to sell at a loss. So buckle up, grab your thinking caps, and get ready to explore the ins and outs of crypto margin trading. We'll guide you through the strategies, the risks, and the rewards, helping you navigate this thrilling yet challenging landscape. The video is for educational and entertainment purposes only. It is not financial advice. Do your own research and do not invest more than what you can afford to lose. Margin Trading 101, borrowing to boost your crypto game. All right, let's break down this whole margin trading thing. It's a strategy that can amplify your gains, but it comes with its own set of complexities. Picture this, you're at a casino and you're feeling lucky. You want to make the most of your opportunity. Instead of just using your own chips, you borrow some from the house to make bigger bets. This allows you to potentially win more. That's essentially what you're doing with margin trading. You're leveraging borrowed funds to increase your trading position. You're borrowing funds from a crypto exchange to buy or sell more cryptocurrency than you could with just your own capital. This can significantly amplify your potential returns. This borrowed money, that's your margin. It's the collateral you put up to secure the loan from the exchange. Let's say you have $1,000 and you want to buy Bitcoin. With margin trading, you can use leverage to control a larger position. With 10 times leverage, you could potentially control a whopping $10,000 worth of Bitcoin. This means your gains could be much higher. Sounds pretty sweet, right? But hold on, we'll get to the risks later. It's crucial to understand that while the potential for profit is high, so is the potential for loss. Margin trading can be a double-edged sword. Always make sure to do your research and understand the risks involved before diving into margin trading. It's not for the faint-hearted, but with the right strategy, it can be a powerful tool in your trading arsenal. Leverage, the double-edged sword of crypto profits. Here's where things get really interesting. Leverage is like that energy drink you chug before a big presentation. It can either make you a superstar or leave you jittery and burnt out. Leverage is a multiplier that amplifies your gains and losses. It's like having a financial megaphone for your trades. A 5% gain with 10 times leverage suddenly becomes a 50% gain. Cha-ching! But here's the catch, and it's a big one. That 5% loss? Yup, it transforms into a 50% loss too. Leverage is a high-risk, high-reward game, folks. Margin calls and liquidation, navigating the risks. Now let's talk about the not-so-fun part, the risks. Trading in the cryptocurrency market can be thrilling, but it comes with its own set of challenges and dangers. Remember that loan you took from the exchange? It seemed like a good idea at the time, right? But there's a catch. Well, they're not just going to let you ride out a losing streak forever. The market can be unforgiving, and the exchange has its own interests to protect. If your trade starts going south and your losses eat into your margin, the situation can quickly spiral out of control. The exchange will hit you with a margin call. This is their way of saying, hey, you need to put up more money to cover your losses. It's basically a polite way of saying, hey, put up more money to cover your losses, or we're selling your assets to protect ourselves. If you can't cough up the dough in time, the exchange will take matters into their own hands. Boom, liquidation. And if you can't cough up the dough in time, Boom! Liquidation. The exchange sells your assets, often at a loss, to cover the debt. It's not pretty, folks. The exchange sells your assets, often at a loss, to cover the debt. It's not pretty, folks. This process can be devastating, wiping out your investments in a flash. Always be prepared and understand the risks involved. Reaping the rewards. Big wins for savvy traders. Okay, enough doom and gloom. Let's talk about why people even bother with this whole margin trading thing. Simply put, the potential for massive profits. For experienced traders who know what they're doing, margin trading can be like turning a steady stream into a raging river of cash. Remember, leverage magnifies those gains, but, and this is a big but, it requires nerves of steel, a deep understanding of the markets, and a well-defined risk management strategy. Don't even think about diving in without these, folks. Volatility vortex riding the crypto roller coaster. The crypto market is like a wild roller coaster ride, exhilarating highs and gut-wrenching lows. And guess what? Margin trading throws you right into the front row of that roller coaster. Volatility can be your best friend or your worst enemy in margin trading. Big price swings can lead to huge profits if you're on the right side of the trade, but they can also wipe out your entire account faster than you can say Bitcoin. Remember, folks, volatility is a double-edged sword. The future of margin trading: AI, blockchain, and DeFi. Hold on to your hats because the future of margin trading is going to be wild. We're talking AI-powered trading bots, decentralized finance, DeFi platforms, and blockchain technology making everything more transparent and secure. Imagine a world where algorithms analyze market trends and execute trades with lightning-fast speed, all while blockchain technology ensures security and transparency. The future of margin trading is going to be a wild ride. Crypto margin trading. Tread carefully, my friends. So, there you have it. The good, the bad, and the potentially ugly of crypto margin trading. It's not for everyone, but it can be a lucrative game for those who play it right. Remember, folks, margin trading is like handling dynamite. Incredibly powerful, but potentially destructive if you don't know what you're doing. Always start small. Use stop-loss orders to manage your risk, and never, ever invest more than you can afford to lose. Now go forth and trade responsibly. Thank you for watching our channel. If you found this video helpful, please like, subscribe, and hit the notification bell for more insightful content. Stay tuned for our next video.